On today's episode of the Cryptoverse. Big disappointment for me, MegaUpload 2.0 and Bitcache aren't going to launch as soon as we thought. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique, decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I am your host, Chris Coney. Today is Friday, the 27th of January 2017, so let us get right into the market roundup. Turning to coinmarketcap.com for the biggest winner and the biggest loser of the day. Now, for those of you that are new to the Cryptoverse, I have to point out, based on comments from yesterday, that when I do the biggest winner and the biggest loser, it's limited to the top 20 most capitalized coins, because the lower capitalized coins have these wild swings that don't really mean anything. If you have like a 50% gain on a coin that's only capitalized by 1 million, well, that's significantly different from, say, Bitcoin with several billion in market cap that moves 5%. We're talking multi-billion dollar swings there. So anything outside the top 20, I just ignore, right? In terms of this analysis anyway. So the biggest winner today, again, is NEM. It's gained another 13.6%. And yesterday, NEM was at half a cent. Well, it's gone up a bit more than that. So it's still half a cent if we're only going to 3 decimal places. But if you look on the screen, you'll see that there's a few decimal points after that now. Anyway, that makes the NEM blockchain have a total market cap of $49.5 million. The biggest loser of the day, the Ardor, which swung pretty high the other day, is now down 11.2, making an Ardor worth 1.8 cents per coin. And if you remember the other day, I was looking at Ardor's website and they're talking about providing blockchain as a service. So if you want to set up your own blockchain without all the complications of finding people to be nodes and mining and all that kind of stuff, then they'll back it with a pre-existing blockchain, which I think is a really interesting idea. Taking a quick look at the Bitcoin price chart then on bitcoinwisdom.com. Same old thing going on here. We're still bouncing around the $900 mark. Not going to spend too long on this because I'm just going to be repeating myself. We've held above 900 today and we closed yesterday above $900. Small trading ranges, still in that consolidation sideways move, still trending up on the exponential moving averages. All fine and dandy, and nothing more else to say than that. Same again on the yuan chart. The sandwich continues, except it's getting squeezed ever smaller. That moving line of support, which is the 50-day moving average blue line, you see it's continuing to squeeze the price up against that 38.2% Fibonacci retracement line, which is at 64.22. Again, like I said yesterday, there's a very rough sort of ascending triangle going on here. When I edit this, I'll put some lines on there to kind of draw it conceptually. It is very rough, but I'm talking about that fixed line of resistance at the top there, and then a ascending line of support, which is these lows getting higher. In terms of the news today then, I've turned to Bitcoin.com to read this article, which ironically is entitled, "Don't Expect to See Kim Dotcom's Bitcoin Babies Until Later This Year." We've got Jamie Redmond, the author of this article, who's I think he's the head writer, chief editor at Bitcoin.com. This article was published yesterday on the 26th of January. So this genuinely is a disappointment for me, this news. I guess one of the downsides of being an optimist is how often reality fails to live up to your expectations. Now, paradoxically, talking like that makes me sound like a pessimist, but you get the idea. Now, the thing I'm most concerned about with this news is that Kim.com has given his skeptics some ammunition, and that's just a bad idea. So when these new projects of his were announced originally, I read dozens of people criticizing it and saying that Kim.com has a track record or as kind of a hype merchant, and all of these big promises for Bitcache weren't going to be fulfilled. So let's get into this story and see what is what. So it says here, on the anniversary of authorities seizing MegaUpload, which was one of Kim.com's previous businesses, Dotcom told the public he had an announcement about his new MegaUpload and Bitcache project. A few days later, Dotcom revealed there would be a significant delay. Now that's only what happened recently. When I said I read dozens of tweets from Kim.com's critics, that was a good 6 months ago when MegaUpload 2.0 and Bitcache were first announced, and they had a crowdfund project going on the Bank to the Future site. It then goes on to say that investors were given explanations to some of the technical questions asked by the crypto community, such as why Bitcache would operate off-chain. Quote, "As you all know, Bitcoin blockchain currently has limitations to the number of transactions that it can handle." Close quote. And that's Kim.com. Now this was what I was most interested in myself. While the scaling debate in Bitcoin continues, entrepreneurs like Kim will seize that as an opportunity to profit. Now I hoped that Bitcache would somehow work around the scaling problem, and that's the essence of what an off-chain solution is. The issue for me was how little technical detail he released about exactly how Bitcache would work. Hence, it left things open for the critics to just go nuts. So the article continues here by saying, "This past week, Dotcom once again told the world he had an exciting announcement. But then a couple of hours later, he was tweeting to his followers that the announcement would not happen. Quote, 'It is unlikely that we can make a full January 20th launch happen. The fundraising was delayed and the legal team needed more time for the new setup.' Close quote. Now, I'm a fan of Kim.com, but can he not keep his mouth shut until the deal's locked in? My attitude has always been to err on the side of under-promise and over-deliver. I mean, you remember the original Star Trek series? The way Scotty got his reputation as a miracle worker was by always telling Captain Kirk that the repairs would take a bit longer than they really would. Now that gave Scotty a margin of error to make sure that he never let the captain down, he never broke his word, and at the same time, more often than not, Scotty would finish the repairs quicker than he promised and would look like he had performed a miracle. Now, operating the other way around, which is over-promising and then under-delivering, that's worse than not saying anything. It's actually the worst of all three approaches. What I would have done is got everything locked in, signed, sealed, and delivered. And then, and only then, would I start teasing out some details about the upcoming news. So then when I made the full announcement, I could make it in full confidence that I would be able to keep my word. I mean, if you can't keep your word, what's it worth? And then people wonder why we need blockchains. Well, we need them because people cannot be trusted. Anyway, let's move on to this next quote here in green. It says, quote, "We are looking forward to a beta launch of MegaUpload 2.0 and Bitcache later this year." Okay, so when this new round of announcements come out later in this year, who's going to take them seriously? You know, there's a reason children are told that story of the boy who cried wolf. Building hype is for people who think short term, but building trust is for people who think long term. So, conclusion time. I'll pretty much repeat my core point, which is the moral of this whole story. The importance of over-delivering for customers is precisely why I give so much admiration to certain projects. Now, the library project, LBRY, is the first one that comes to my mind when I think of this. They are well into their development of their system, yet they are still only letting people in on an invite-only basis. I'll put it up on screen for you. Now, I interviewed Jeremy Kaufman on this very channel a little while back. And while I believe their software is good enough to release, he didn't agree. He is thinking about the everyday user, not the Bitcoiners, not the tech savvy, the average person that wants to buy a song or whatever content it happens to be. And until he's happy that the system works well enough to give that person a high quality experience, he is not willing to fully launch. And then Monero also comes across to me as embodying this attitude. Ricardo actually says in one of his presentations, he specifically told people not to invest in Monero coins because they were still developing the technology. Despite that, tons of people went and bought Monero. So I strongly recommend watching the presentation that Ricardo gave to Coinbase, because I think you'll get a really good feel for the guy. And I'll post a link to that video in the description of this video. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse by boosting cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From just a few dollars a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I will be back on Monday with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.